It's Rick, and it's Thursday, October 20th. I'm going to change things up a little bit tonight. Do a quick review of what happened in the market today, but then I want to give you a couple of tools that can help you deploy that mountain of cash that hopefully most of you are sitting on and patiently waiting for some things to do. So we'll get to it. This is the MarketSmith, and this is a 15-minute chart of the S&P 500. So I wouldn't expect you guys would get this granular, but what I do is I take the high of the last 2 days. Now I know it's up here, but that was a gap up, so I sort of ignored that and said, okay, where was sort of the real high? And I draw a line on my charts before the day starts. And why can't I draw a line? There we go. At the high, and then again at the low, which is the low that was down here. And that sort of sets the stage for today, watching for today. And as long as it stays within that box, I'm not really paying much attention, don't really care. But when it gets outside, then that will get my a bit more attention. So it came up here, didn't really get through. And then by this time, Janice and I headed out for our walk. And when we came back, we're in the middle of this crap here. So a nothing day. So how did that impact me? Not too much. Recall I'm an elf. I've already pocketed a good size gain here. I did get stopped out. I think I probably end up with bottom tick, the worst price of the day, but who cares? Ended up, was about a 4% profit trade. So not a biggie, but and not what could have been. But it actually, if it does what I drew out here a couple of days ago, this could set up to be even better. So it's obviously going to stay on my radar. LPLA came down, actually came within 20 or 30 cents of my stop, which is on a $200 price stock. That's ridiculous. It'll probably stop out tomorrow, but if the market opens strong or something, it could save us. So it's still alive. DGII had another good day. It was up, where are we at? It doesn't really matter. It was up about 1.5% today on a big down day for the market. So again, if this market conditions were better, this thing would be ripping, but we're up about 4% on this now. So that's not too bad for starters. And then the oil and gas sector ETF was up another bit today. It actually got right up here over 16, right near the highs of this in here, where I might even be an add-on spot. So we're up about 4% there on a relatively small position. But anyway, that's it for that. So back to some tools for you. You should be able to set up, take this, you should be able to set up with your broker platform charts that look just like this. So on the left-hand side, you have a weekly chart. And on here, I only have two moving averages. One is the 40-week moving average, and this one is the 10-week moving average. And on the right side of the screen, you would have a daily chart for the same instrument. It has the 200-day moving average. I have too many on here. I would argue that if you're doing your scanning, let's just take a couple of these out. You only need really the take off the shorter ones. Just need the 50-day and the 200, and that basically corresponds with the these two moving averages on the weekly chart. And then over here is this is a watch list. So your broker platform should be able to support any numbers of watch lists. And I have this particular watch list is just ETFs, which I'm going to shrink it a bit right now, because these are the market indexes, ETFs. And then I have about maybe 100 other ETFs for sectors that I follow, and that'll get to part two of this presentation. Right now, I'm going to focus on just the major indexes. So this is the basic setup that you'd be looking at. So I'm going to assume the first group of investors are what I would call, they're ultra conservative, and I would say ultra lazy. So really, you just want to operate within some buy-sell rules that are really simple, and I don't have to maintain or watch over this thing for any given amount of time. So that's the first group. So let's just see how that group might operate. I'm going to expand this weekly chart, because you'd be only going off the weekly chart, not the daily. And so you'd only be looking at the 5 major indexes, and I would actually argue to only be looking at 2. The only 2 probably are, there's the S&P 500 and then the XIU, which is the Canadian equivalent. If you're so inclined that you only want to invest in Canada, then you'd go with the XIU. So those would be the only 2: the QQQ, the mid caps, and the small caps. I still would recommend you put on a watch list and have a look at them. But what you're going to do is you're only going to invest this pile of cash that you have if and when price gets above this 40-week moving average. So you'd have been invested back here, you'd still be invested, and then you'd be selling the minute it closes below that 40-week moving average. And then you sit and you wait again until it crosses above, which it did in March, very briefly, and then you got taken out again. And then maybe again here in August, but then quickly got reversed. So very limited scanning. So, I mean, if you had this sort of a setup, this would be your weekly routine. And I suggest you do this weekly, because each one of these bars are a week. But you'd look at IWM, and you're only asking yourself one question: is price above the 40-week moving average? No. Move on. No. 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 That's it. Your scanning is done. You're safely keep your money in cash. You're not investing it, and you wait till next weekend. You'll have another look. That's it. That's all. Very simple. Now, some of you may be saying, "Oh, I don't want to wait. I think this is going up here. I don't really want to wait till it gets up here," which I suppose that's okay. But now you're into managing it a little more frequently. And that's where the daily comes into play. So I do the same review here. So we start with the small caps. Is price above the 200? Obviously it's not, because it's not over here, but where is it in relation to the 50? Yeah, forget it. Forget it. Forget it. No interest. No, thank you. So again, you're done. There's just absolutely nothing to do, and that's about the extent of your analysis that you need to do. It'll get a little trickier when we start getting price gets into here. You might have to look at it a little more carefully, but that's it. So with that kind of investing, if you had pick a number, $200,000, and it's all sitting in cash, you're going to wait, and you're going to wait, and you're going to wait. Then when you finally do get invested, let's expand this out a bit more again. When you do get invested, the maximum risk is when it first crosses the moving average, because you don't have a lot of history here. So is it going to keep going, or is it just going to roll over? So there is a potential for a little bit of in, out, but the whole risk to your account should not be greater than 1 or 2%. So, you're looking at $3,000 or $4,000 on this $200,000 account at the initial stages when you get in. But once you get in and you've got a profit, then you tighten up your rules, and a simple one that you could go ultra simple and say, I'm not going to sell unless it crosses below the 40-week moving average. Or you could have an 8% rule. It says, okay, but if the price drops 8%, but it still hasn't hit the 40-week moving average, I'm going to sell half my position. And then if it does keep going down and gets to the 40-week moving average, I'll sell the balance of it. So you could modify that, but once you're in a profit, those are nice problems to have, is managing your capital that's over and above the initial amount that you started with. So that's the simplest, and that might appeal to a few of you. Some of you that I would say are, I won't say, you can't use the word aggressive. You're still ultra conservative or very conservative, but want to expand your horizons a little bit. You could begin to look at exchange traded funds or sectors. And so I have a list of about 100 that I have imported into this particular watch list. And again, you could take the approach, I'll start there. They'll take the approach that I'm only interested in participating. Let's start with the first one, which is bond index. Whew, no, thank you. I'm only interested in participating when price gets above the 40-week moving average. Let's take that premise. I really don't want too much activity, too many trades to think about, too many decisions to make. So I'm only going to look at things and invest in things that are above the 40-week moving average. So again, these are by virtue of these are sectors. You wouldn't be putting your entire account into one sector. You'd probably have a maximum exposure of 20%, 25%. So you'd have 4 or 5 positions open at any one time. As you'll see as we go through these right now, there is just a real complete lack of anything. There's a few, but when you get into a bull market, you've got your choice of out of the 100 sectors in a bull market, probably 70 or 80 are going up, and they would be beyond the 200 to the 40-week moving average. So now you got to make some choices, which one you think are better, but that's a nice problem to have. So again, let's just take the same analysis. So I have this list of roughly 100 ETFs. Now, in my situation here, what I've done is I've put the Canadian ones in one block, and then all of the rest are in US funds. There are very precious few Canadian sectors that I'll look at because they just generally mirror the US. And I have at least half of my accounts are denominated in US dollars, or have US cash in it. So I don't trade in Canadian dollars or the Canadian exchanges very much, but your preference may be completely different. Just as a side note, that strategy has actually worked pretty well this year. I'm down overall about 10%, which I'm pretty annoyed at that for allowing my accounts to get that low. But nevertheless, that's what's happened. And I go into more depth in that in my presentation on building and managing a portfolio. But thinking about or looking at the other day, foreign exchange gains, because most of them, half of my cash and whatnot has been in US dollars, and because the Canadian dollar has depreciated against the US, really I'm only down about 4%. So I guess I can take some solace in that. But to me, a dollar is a dollar is a dollar, whether it's denominated in Canada or US. So again, we just go through this list. No. Yes, found one. In fact, I bought this one 2 days ago. So yeah, it's now trending above the 40-week moving average. It's actually above the 10-week moving average. It's going in the right direction. So this one should be on the radar. So what I would do is I just simply write this one down on a list as I'm going through here, and we'll look at that. You would look at this in more detail. So I'll write that one down on my sheet. Next. No. Gold, no. Information technologies, no. Materials, no. Real estate, not a chance, no. Dividend funds, no. But this one has the potential to get there in a couple of weeks, so I'd put that on a list. to watch further. I'd put that in a secondary watch list. Banks, Canadian banks, no. Utilities, not a no, thank you. So now we get into the US. High yield bonds, no, thank you. Kathy Woods, ARK Investments, no, thank you. China stocks, no, thank you. Biotech, forget it. Bitcoin, forget it. Blockchain, forget it. Corn, yeah. I personally wouldn't trade a commodity on as an ETF, but it is an interesting chart pattern. So you might put a few dollars in this kind of an instrument. Commodities, yep. This will go on a list to have a look at because it's the 40 week is flattened out, so it's a toss up whether we're going to go this way or that way, but it'd be worth keeping an eye on this one. So that would go on my list. And then we get into a whole bunch of country funds. This is Australia, no thank you. D stands for Sweden, no thank you. And the reason I keep these on the list, just you never know. There's just you might get a divergence of some form around the world. And I can bet any of you that are still in a global fund, if you still have mutual funds, God help you, I'm sorry. But I'm sure that part of your mutual funds are in global funds and you're going to be owning these things. You own them now if you're in such a fund. So, but they don't look pretty. Japan, no. I think pretty much all of these are a no. So, except I know they're all no. So, but I'm going to skip down to the last one, though. It's not a no. And for some reason, Brazil, although the 40 week is trending down, currently the price is above the 40 week moving average. So I don't know what the hell's going on in Brazil that's different than the rest of the world, but it might be worth looking at. You'd obviously do a bit more due diligence on that. FFTY, no. China again, large caps, no thanks. Gold, no thanks. More gold. Clean energy. You would have thought so, not so much. Software, technology, forget it. Russell 2000 growth. Yeah, that's not growing, it's growing the wrong way. Real estate, oh, peachy. Transportations, no thank you. Telecommunications, holy crap, I don't know, that fell off the. Airlines, no. Regional banks in the US, no thanks. China again, internet companies, no thanks. How about pot stocks? No. There's a lot of talk about it, a lot of chatter about legalization in the US on that, but investors don't give a rip. Home builders. Oh, that's that shouldn't be on this list. How about oil? There we go. Again, it's coming out of the 40 week is flat. This is just now bolted out of there. But since I already own the XEG, I'm not going to double up and have any more, but this one would go on a list for a watch. Okay, I got some wrong things in here that are leveraged ones. I try to keep the leveraged ETFs in a separate watch list. No. Steel stocks, no, but I would go on a list because it's could be turning. Who knows? It might take another month or so. But again, if you're doing this process every week or every 2 weeks, you'll see when it turns. There's lots of time. You don't have to catch the very bottom. And if 1 week it just rips up to here somewhere, you missed it. So what? There's another one coming along. Semiconductors, no, thank you. Social media, no. Solar energy was in favor, was doing fine, and then it fell off the cliff here. So I mean, that can happen. Treasury bonds. Oh my goodness. Bonds are a safe place. Treasury bills are a safe place to be, right? Yeah, not so much. Oil. Oil has been bopping around in here close to it, but the moving average is turned down. So I just have an aversion to oil, as everybody knows. Uranium, that is trending down. No thanks. There's a chart. That's the US dollar index. To me, these moves are really tiny. So the risk reward is just not there. However, if you bought it down here at 26, that's up 10% or so. But this is getting a little extended by. And then the Vanguard funds, which is there's Europe, not so much. Real estate again. Vanguard is a great mutual fund, and they've got a value fund. No, thank you. Home builders. Nope. Materials. Nope. Communication services. Nope. Whoa, hold a sec. Oh, that's XLE. That's the oil and gas, or that's the energy sector. That's the one that triggered my buy on the Canadian side of it, because Minervini bought this yesterday down here somewhere. But that's definitely a chart that's worthy of looking at. Financials, no thanks. So I think you're getting the idea. This can be done very quickly. We're going through about 100 of these, and I haven't been timing myself, but it doesn't take very long. You could do the entire 100 in I'd say 10-15 minutes tops. You just stop when you see one that's, healthcare. Is this going to turn back? We'll have lots of notice. We can see that in the next couple of weeks. Materials. Now I'm going to show you some charts here. I wouldn't recommend, for most of you, these would not be ones that I would recommend for you. For example, DOG is the inverse of the Dow Jones. But look at that chart. It's coming off this decline and now turning back up. But this is the Dow Jones short. So if you really think the Dow Jones is going lower, you would be buying this. That's not a strategy I recommend, other than those that are a little more advanced. But this is the real estate index short. So it's headed this way. That does not bode well for real estate in general. EPV, I don't know what that is. Oh, it's Europe. So this whole batch, they're all green, at least for today, and they're all going this way because they're actually short ETFs that go short. Not recommending you do that, but so I would take those off the list. And then finally down here, I have a list of leveraged ETFs, and these are particularly useful only usually for the indexes. The TNA as an example. That's an ugly looking chart, but when it starts to go up, like when we're in this kind of a period, these give you triple the bang for the buck. So for example, so they can be used not as long-term investments, but relatively short-term, and they give you superior gains. But again, they come with higher risk because of the leverage. So you absolutely have to know stop losses, have proper stop loss placements, rules for putting them in, and so on. Otherwise, they can cause you a lot of damage. Okay, so that's hopefully that helps you. Say maybe next time I have another dull day in the market, we could look at the strategies that are not quite as passive as this. I mean, this is what I call a pretty passive strategy. You're only going to be buying when it gets above this level. So you're making relatively few decisions. And you're not, if the trades are not that frequent. But there is a way if you want to get a slightly more, again, I won't use the word aggressive, but in tune with it, we can pay attention to these other slower moving averages and take advantage of bumps and get some profit in this zone in here, knowing that we're going to enter a full position once we get above the 200-day moving average. But there are opportunities for profit in this area in here. So I'll outline those strategies in a later video. So I hope that was helpful. If so, let me know. And if anybody's interested in my sector list, ETF list, just email me and I'll send you an Excel version of it so you can import it into your broker platform. And then just go ahead and all the ones that are of no interest to you, obviously just simply delete them. And you could probably narrow this list down to 40, 50 names tops. It's all you need to keep track of. And again, your weekend review of these shouldn't take more than 10, 15 minutes. Okay, that's it. Stay safe, everyone.